Perfect. Hope everyone can see okay, and so excited to meet you all today. And Christopher, thank you for the introduction. I am excited to chat with you all today about a really exciting credit, which is the Research and Development Tax Credit. It's a really neat opportunity for innovators to recoup some costs associated with development. So we'll chat through all the basics of the R&D credit today, what companies qualify, how do you qualify, and who can you look to help you claim the credit. So without further ado, I'll just do a quick introduction for all of you so you know who you're talking to today. My name's Paige Burbank. I work with ADP. That might have triggered some knowledge of the company I work for. ADP is primarily known for payroll and human capital management. But the lesser known side of ADP is actually our tax house, where we work on tax credits for clients and non-clients, which is super exciting. So our tax practice has been around for 45 years, working on all different types of credits. And I specifically work on research and development credits. And I've been with ADP for about 6 years now. So before I get started, I just wanted to throw this quick polling question out here to find out the knowledge base around the R&D tax credit to really help guide the conversation around the credit through the presentation today. So if you could all just throw in the chat 1, 2, or 3. 1, I have heard of the R&D tax credit. 2, I have not heard of the R&D tax credit. And 3, I am taking the R&D tax credit. I always am interested to hear the different responses. So feel free to throw that in the chat so I could check it out. But getting into really the meat and potatoes of the conversation today, what is the Federal Research and Development Tax Credit? So the credit itself has been around since the 80s. And some of you might have answered, I've never heard of it. It's not uncommon, right?
You're getting a lot of twos in their Page, all twos. So.
Okay, perfect. Yep. And I'm sure that's why you might be on the call today to learn more about the R&D tax credit. But really the credit's been around since the 80s. It was made permanent in 2015. In 2015, the PATH Act came about, which was a really important component to allowing different businesses to now be able to take advantage of the credit. So now small to medium-sized businesses could attain and apply for the credit. So no longer was it just like the Googles and the Teslas of the world taking advantage of the credit. Now the small to medium-sized startup businesses can take advantage of the credit. And I'm sure you're all wondering, okay, why is the government giving us money back on taxes, right? That's kind of the common question. Well, really, the R&D tax credit is designed to encourage U.S.-based expenditure into keeping key critical jobs here in the U.S. So think engineering, physical, bio, computer science, so all your STEM jobs. And that's really why the credits come about. Now, I mentioned there's the federal tax credit. The neat thing about the credit is various states have credits as well. California is one of the states that does have a credit as well. So that means that not only can you claim credits on the federal side, but you can also claim credits on the California side as well. Now we're going to talk a little bit about how to monetize the credit and utilize the credit, because obviously that's the most important part. If you get a credit, how do I use it? So the neat part about the credit is it can be utilized retroactively. What that means is businesses can generate a refund of taxes previously paid and carry forward unused credits for up to 20 years. So that means if you're like, hey, I've been doing development for the last few years and I haven't claimed the credit, good news is we can go back 3 years and uncover those credits along with current year. Now, in terms of monetizing the credit can be monetized in one of 2 ways. One is against the regular business tax, right? So a really simple example of that is, let's just say you filed your taxes here, or you're about to file your 2024 taxes, and you owed $50,000 in taxes to the IRS. If your business is eligible for a $50,000 tax credit, you don't have to write that check to the IRS, so allowing you to keep that money in your pocket and reinvest in innovation or scaling or growing your business, which is neat. Now, I mentioned in 2015, there were some changes with the credit, and it allowed, startup companies to take advantage of the credits. Now, companies that are deemed qualified small businesses or startup businesses are eligible to take the credit against their payroll tax, which is great news. As we know, a lot of, startup companies might not be in a revenue generating state from the start, and it takes a little bit of time to get there. And once you start producing that revenue, it's likely that you're going to have taxes. But in the interim, they're allowing businesses who are under 5 years of generating gross receipts and $5 million in revenue to utilize the tax credit against the social security portion of their FICA employer taxes. So what that means is, as many of you might know who have payroll for the business, each quarter you're paying those quarterly taxes. You'd receive a refund check from the IRS in the amount of the credit each quarter, which is great. Now, this is the piece that is kind of rings true with the answers within the chat of, hey, I've never heard of this credit before. There's about $20 billion in spend on the R&D credit each year, and only a third of eligible businesses are actually claiming the credit, which means that there's a lot of money being left on the table. And really, that's why I love hopping on these calls and meeting with my CPA partners and bank partners and clients to share the knowledge of this credit, because it's not a widely known credit that is being claimed today, but something that businesses can definitely leverage to recoup some of that cost. So I always like to share this number because it's kind of alarming that there's this many businesses eligible that aren't claiming. But good news that we can go back those 3 years, like I previously mentioned, to rope in credits that we found. Now, you're probably all wondering, do I qualify for this credit? It all sounds good. I can, recoup some costs. I don't have to pay as much in taxes, which is all great. But how do I qualify, right? So the research and development tax credit is an activity-based tax credit. And what that really means is when the government releases a credit like this, they're trying to incentivize and encourage a specific type of activity. And like I mentioned, that's really keeping those key jobs here in the US. So this right here is the IRS 4-part test or criteria that is used to determine if a company's activities qualify for the credit. So I'll walk you through all 4 parts of the test. I won't get deeply technical here just because it's different for each business, but we could definitely one-off on a separate meeting and chat through the 4-part test in regard to your particular business. But really, these are the 4 parts. 1 is permitted purpose, and permitted purpose just essentially means, what is your business component? What is it that you're, creating or improving performance or functionality of? Is it a product? Is it a process? Is it a software, formula, invention, technique? It can be any one of those things or a few of those things, right? And 2, it has to be technological in nature. So it has to rely on one of the hard sciences. So it has to be rooted in some level of physical, biological, engineering, computer science, you name it. Now, 3 and 4 are, I would say, the more tricky areas to, pass the test. So 3 is elimination of uncertainty. So essentially what that means is, on onset of improving functionality, performance, reliability, or creating a new product, there has to be some degree of uncertainty around method, capability, design, etc. And then 4 kind of goes hand in hand with 3, process of experimentation. So, your method has to be tried in some level of iteration of trial and error, simulation, etc. So when we think about the 4-part test, some industries come to mind that are really great fits for this credit. And a few of them are, obviously, software development is huge. So having any developers on staff, just the nature of software development is an iterative process of going back and recoding and new widgets and new, versions that are being released and things like that. So usually software companies really easily pass this 4-part test and therefore have some really large credits to claim. Manufacturing is another big one. Any type of product, design, specification, process through manufacturing usually typically qualifies very easily. And then biotech is a really great one too. But I always like to mention this example when we think about R&D. A lot of times we think like people in lab coats mixing potions and things like that, and it's simply just not the case. There's many industries that qualify outside of those core 3 that I mentioned. For example, I don't know how many of you like wine. I love wine, and I'm sure some of you might be near Napa and really love the wine there too. So I like to use this example. Winemaking is typically one of those industries we don't think about, but it qualifies because of the nature of what they're doing. So they're, looking into the soil. How can I create the best soil atmosphere to grow the best grapes? Or how can I find different ways to improve the bottling of my project or increase harvesting yields, things like that. So that's an example I always like to share when it comes to some of the prime industries. Now, timing is everything with the credit, of course. So the cost must be tied to a business that files a tax return, specifically in the US, of course. Now, a lot of companies that I work for have, a portion of their R&D that's done here in the US and a portion that's done outside of the US. And that's perfectly okay as long as there's a US-based business return. We can claim the credits. And cost must be fund designing, developing of your, product or component or process or formula. And then also sometimes companies go through these phases where they're doing high level of development in certain years and kind of slow down. So not only can you claim the credit every single year ongoing, but if you had high levels of development in the 3 previous years, you can zero in on those years to recoup costs. In terms of eligible R&D costs and what is included in the calculation of the credit, it's going to be W-2 wages of any employees that are working on R&D. Contract research would be any 1099s or companies that you're, hiring to do research and development for you. The third category is supply costs. So supply costs means any raw materials that go into prototyping. This does not, unfortunately, and I get this question all the time, does not include machinery, computers, etc. It really just includes that raw materials for prototyping before you hit mass production of whatever it might be. And then the fourth category is specific to software companies, which is cloud computing, specifically within the realm of your development environment, and think AWS, things like that. I think we saw a few maybe questions pop up. They didn't pop up on my end, so I'll pause here if there were any that we wanted to chat through now.
Yep, we've got a question from Latif. So thank you, Latif, for the question. Paige, are offshore software engineering services eligible?
Great question. So if the development is being done outside of the US, unfortunately, that can't be roped into the credit calculation. However, I have worked with several companies that have all of their development being done outside of the US, but there is a portion or team within the US that oversees the development. And sometimes we can include those supervisor costs. And usually those are the high level salary and wages. So the credit can get, relatively large just based on those US based wages.
Got it.
Awesome. Paige, thank you, Latif, for the question.
Thank you. Okay. And then really to tie a bow on kind of the conversation about the monetization and utilizing the credit. So again, the credit can be used to offset your income tax or can be utilized against your payroll tax for companies who are deemed startup businesses by the IRS. There's also times where if a company does not owe tax, but they can carry forward the credit for up to 20 years, it could be strategic to capture the credit now. When you think of like M&As and, potentially selling your business or something like that, having a tax deferred asset such as the R&D credit that can be utilized in future years to offset costs that a new owner could incur can be a really strategic way to capture the credit. And then, of course, as I mentioned, if the credit is based on costs from past years, you can amend those previous year tax returns to get a refund for previously paid taxes, which is always a nice chunk of change to receive in the mail. And then just a few more slides here, and then I'll wrap it up and open it up to questions. But I always like to share a few case studies to really get an idea of credit size and maybe you're thinking about your own business and what that could look like for you. So this company in particular was a software company. They were a 16-employee C Corp. They were working on AI-based application basically to allow password-free entry into whatever login based on trust scores for the users. So really neat idea there. And they had about 5 employees that were specifically working on software development in the US. Their eligible salaries and wages were about $250,000, and they had an additional $70,000 in contractor costs that they were paying to another company to help with development. And this credit was $40,000 for a given year to the client. But as you can see, employee size isn't necessarily the end all be all for credit size. This next example was an energy company. This was a much larger credit. They were basically harvesting geothermal energy, and they designed and engineered patentable materials to use in their own systems. They had about $1.3 million in salaries and wages, 850 grand in additional contracted engineering and testing, and then supplies for the prototyping and materials was about 350 grand. And their total credit was $275,000, which they were able to utilize against the payroll tax. And this was only a 13-employee company as well. And then my last example here is a medical tool company. They created a bone cleaning tool. They were only 8 employees. Wages were about $100,000, supplies about $25,000, and they had a $12,000 credit year over year. The company's taxes weren't super high, so this $12,000 just ate it all up and put them in a really comfortable spot for taxes each year. Now I'll talk to you about claiming the credit because, again, if you're thinking of your own business and you're like, this sounds like I could take advantage of it, I'll talk to you a little bit about the ADP R&D tax credit lifestyle cycle. This could look a little bit different for other businesses, but I always like to speak to this because there's always questions around, what would it take for me to claim this credit? And the good news is if you work with a company that's going to produce the credit study for you, it's going to be very low lift. So how ADP operates our credit studies is really we start with a project scoping call. On that call, we chat through the credit. We provide an estimate of the credit value. We talk about utilization, which manner you can use it, whether that's against payroll tax or your income tax. We talk about predicted ROI and strategize on when would be the best time to take the credit. These initial meetings are about 30 minutes, and the good news is they are complimentary with ADP if you are looking to explore that further. From there, if the credit's material and something you like to do, most companies are going to do a few things with you. They're going to do a kickoff call and then a tech call. The tech call is the oral testimony required by the IRS where you chat through, which employees are doing R&D, what exactly are they working on, and everything like that. From there, you'll kind of be off to the races and you can go off and do your own thing. ADP produces the credit study for you, which then would be filed with your tax return and your CPA to offset those taxes or start receiving those refund checks each quarter. And then the full audit support is really the last piece. Anything you put on a tax return, you want to make sure you've got somebody who's willing to defend it in the case of an audit. I will say that this question also comes up very frequently. What is the risk of taking the R&D credit? And there is not much risk associated with it. I'll tell you that. There's never really audits for the R&D tax credit itself. It's more so if the business gets audited, the R&D tax credit is looked at. And that's when you want to make sure that you have somebody who produced quality work who can stand behind it. And last, a final shameless plug, if you are looking to explore this further, again, we do the free assessments to determine credit eligibility. We can finalize these credit studies rather quickly in 3 to 6 weeks or less if necessary. I know probably taxes might be on everybody's mind right now. They're sure on mine. Full audit defense, and then really just the expertise of our team. We have over 300 people working on the tax credits directly. They're accounting professionals, lawyers, scientists, engineers, so they can really speak the language of what you're doing every single day within the business. And then we utilize a contingent fee structure, which is great. It provides a lot of wiggle room for our companies to take advantage of the credit. We include full audit support. And then really just brand and reputation is huge with anybody that you work with on the R&D tax credit. Just ensuring that you have a company that's going to be around next year or the next year or the next year is important, and somebody who produces quality work. So I will leave my contact information here. If anybody wants to discuss this further, wants estimate of credits for their own business, feel free to shoot me a text, give me a call, email. I'm open to it all. And I'm happy to set up some time to chat through it. But without further ado, there should have been